Hello, everyone. Welcome back to the RationalInvestor.com's daily brief. Every single day, we have a different daily brief to put people's into a fun, happy mood. I love actually reading the comments back afterward. You guys like, man, that was a good one you started today. Most of the time, it's just totally off the cuff. We don't have any pre-recorded intro or anything, so I just totally ad lib. So actually, it was kind of cool to see the feedback from all of you saying you love the funny intros. I don't know. We can't do a. There's not really a bark 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 daily brief. Nah, that doesn't work. Anyway, welcome back to the frivolity. Hopefully everybody can see me and hear me on YouTube. Okay, got a big colorful shirt on today. Thought maybe I would mix things up a little bit. I don't know whether these numbers are right, but it looks like we got maybe just about 2 or 3 people watching. So anyway, if you are watching the video after the fact and later on in the day, please feel free to, how do we say, put in the comments below, like, subscribe, ring Brian's bell, ring my bell, ring my bell. And let's see whether we can give you guys some value here today. Who knows? If you just look at the broader market picture here, S&P 500 is still sort of grinding its way higher, and now we've got a pretty well-defined W in ZTO. So we were actually sort of musing in the day trader room this morning, a couple of the day traders and myself, about how they actually one gentleman who's turned into a very, very good trader. Sked Finger, I think his screen name is. Anyway, he got long the market, and we were just conjecturing whether maybe he could just sit. He's in a free runner right now, and you can see stock markets are all moving up. And the question ultimately is, can he just ride the wave, ride the inertia? So I was actually very proud of him. Nice trade this morning, Mr. Sked Finger, if that is your real name. Got long off of a VWAP sort of test and is riding a free position now, so way to go. I didn't really have anything set up for myself here day trading wise. I think I've shown you the spreadsheet. What does my day look like? It's a pretty darn busy day. we were going to excuse me, do like a boot camp. Who wants to actually be a day trader, and what the heck does that life kind of look like? This would be one of sort of the documents that I'd want to work with people on building for themselves. And you can see, look at all these tabs. This is basically a trader's life, and each one of these are a different trade setup that I like to trade. Then also I have trading plans about algos and little old lady canasta club, and then my stock swing plan. In fact, actually we had a really fun stock pickers meeting last night. Went through a bunch of names. Nothing really new on the list, but we reviewed a whole bunch of names that we were interested in before. I got to tell you, I absolutely love it. I don't know whether we'll have time to really dig into it earlier, but we had actually sort of spread ideas in things like beer stocks. We had talked a bit about bull flags. In fact, if I'm not mistaken, I think Josh and Chris even put together a short YouTube short, whatever you want to call it, on this bull flag that we saw develop in Anheuser-Busch, Budweiser, about a month or so ago. So actually, this might make a really cool follow-up if you guys are taking notes, because you can clearly see Budweiser's rocking and rolling here. So that stock market pick, if you will, I don't know if you want to call it that or not, but anyway, it looks like it's killing it right now. Might be interesting to see what this spread is actually trading at now, but maybe we'll do that in the after party. But really good to see. I do distinctly remember we had mentioned that this was a bull flag, and it was rocking. This is a weekly chart, so you can see in the past few weeks the darn market has just taken off like a rocket here. So, one name this was a name that we kicked around in the stock pickers club a while ago, but one name actually that just keeps jumping out at me that looks so darn attractive. And I was reviewing it last night with the gang. Was the JetBlue, and I tell you, I think there is a spread trade in there somewhere. I just never know where the hell it is. JBLU, I think that's the symbol. So right down at the bottom end of the range, and you can go and buy like the $10 call and write the $12 call. You can see where the Foggenbaum is. So I think that is technically still working as long as this floor sort of hangs in there. I suppose if we put in a new W, maybe a new one will pop up and that'll even paint an even higher Foggenbaum. But right down against the bottom end of the range, and the spread right now is only like 25 cents, eh? So you can see 25, you'll pay 50, 49, whatever, for the $10 calls, and write the 12s for 25 cents, and you can see it's fairly well bid and offered. And that equates to a total cost of 25 cents. And if this position goes up into Foggenbaums and we just do simple things like 50% retracements, I mean, look how far this stock has fallen. So just even 50% retracement of the most recent range, that would take us up into sort of $14 area. The position would be completely called away from you. So you're paying 25 cents for the position, and it's called away from you at $2. 25 cents into $2. That's like a eight bagger. You know, we love those kind of trades. You can kind of see too, 200 SMA here. It's kind of flattening out. So could we get some sort of pop here on this stock up into this area? Keep in mind, this is a leap option. So the trade is actually good basically for almost a full year. So anyway, that was something that we kicked around last night. Looks very attractive, I'll tell you that much, by crackers. And that's the thing is, and this is okay, I'm just going to leave it at that. Maybe we can explore that a little bit more in the after party. So those are the kind of things that we were doing in the club last night. Give you an idea, like I showed you that spreadsheet, like what do I do when I first wake up in the morning? I actually have a very set routine. I mean, the very first thing that I like to do is just pull up this overview page, just what the heck is going on in the world. Get a good look at things like the US dollar. Obviously, you can see US dollar's put in a very wide bottom here. And I guess that kind of makes sense. We've been talking about this recently. We're at a couple foggies here. Should we maybe do a bit of back and forth thing? And if we do happen to bottom here, and we start boggying up to the upside, where does that take us? Oh, gee whiz, just going to be a test of the previous highs, which would be pretty normal. I mean, this is just TA 101. So it doesn't surprise me that we're seeing a little bit of a fight against these lows. I would have thought candle body lows would have been one hell of a trade location. And sure enough, look at that tail right into that candle body low level. Ay, caramba. But if the US dollar is bottoming, that probably shouldn't be good for commodities. And lo and behold, look what's happening to the crude oil here this morning, just getting smoked. So that was a bit of a surprise. You can see an M top coming in here on gold. Silver's hanging in there. As we had sort of said, the stock market's still looking very uppy. And, you know, when I looked at... we probably at some point want to get this kind of image on the dashboard on TRI, but until we do have that and things like market carpets, I'll just pull up this page for you. But you can see, I mean, we're up 2/3% here, 200-point rally, 1.25% on the Nasdaq. Remember the past couple of days, the Nasdaq's just been getting smoked here. I do think that the Nasdaq got a little bit ahead of itself, but S&P's now sort of middle of the road, up about 1%. Remember, we always said that, and I don't know whether you remember this or not, but the rule, generally speaking, in the stock market is, this, 1%, 1.5%, 0.5% move. This is just sort of like meh. It's just market noise. Ironically enough, from a news perspective basis, this really isn't really that big of a news day. Um, Econ wise, pretty light day. We did have a couple interesting prints come in here this morning. I suppose, being Wednesday, the biggest news driver is oil inventories. And that actually came in quite a bit of a drawdown. In fact, it was so big that I even, where the hell is it? I even tweeted it out because what letter of the alphabet do you see there? So we say that the definition of a trend, bull trend, higher highs and higher lows, bear trend, lower highs and lower lows. And I mean, just look at the data here. So I don't know whether this was a function of Mr. Biden trying to manipulate the elections there last fall and screwing around with the inventory data, trying to get prices as high as possible, or I guess as low as possible, beg your pardon. And now that's unwinding, or this is and this is where why do fundamental analysis? Well, I think the market is trying to speak to us. The interesting thing is, of course, this should be bullish of the commodity price. I guess the only difference here is that this is not a supply issue. I think this is more a demand issue. That the U.S. economy is still fairly strong, and demand, they are drawing down the inventories of crude oil in stockpiles and warehouses. Of course, this should send prices appreciably higher. The only thing I've been noticing recently, for whatever it's worth, and we were kind of just joking about it in the day trader room, is it seems of late it's sort of like a buy the rumor, sell the news kind of scenario. So heading into that inventory number, we had the market pretty well bid here. This was a previous double top breakdown level. So if anything, really, really good analogy of Wyckoff checks. That's basically exactly what that is. And were they bidding prices up here because they were expecting that drawdown? And then once the number actually came out, all right, well then that we were expecting a drawdown and it was ugly. And then anybody who did buy the lows here expecting some bullish numbers coming out, they're selling into that strength. I would simply say, for me, I'm a big levels kind of guy. I always like to start the my day off. That's not the right word. To start my routine in the morning with a check on things like the opening range trade, and then there is a gentleman on the internet. He goes by the name ICT. He has an interesting setup that I've seen is quite popular. Also, too, this kind of corresponds well with another gentleman in our day trading room, Craig, who really likes the FU setup. And it's just nothing more than hunting runs of overnight liquidity pools. This was an interesting one in the ES because basically the highs of the overnight session were like literally seconds before the opening bell. This red section, of course, here is the retail session. You can see they pulled a couple of these FUs. I think actually there was a half decent little ICT short. The only problem is I'm religious about shorting against things like Brian's favorite fib, and as this thing's been moving down here, I've been adjusting this. At this point right here, I was like, okay, if we get a counter trend rally back up into sort of like, you can think of this as like a head and shoulders kind of pattern. So left shoulder, neckline, head, neckline, so another shoulder, and then down we go. I could hunt a short there, and as you can see on the screen here, it never developed through that opening window. If anything, it looks like it's developing now. So I certainly don't like to put on new positions while I'm doing the daily brief. So I certainly won't entertain that idea. Had this counter trend rallied up here within the first hour or so of trade, I probably would have seriously considered that. But as it stands right now, maybe after I'm done, if a nice pretty M comes in up top here, I might hit that. But if anything, like I said there earlier, not huge movements, whether it be gold, off of less than 0.5%. The oil is basically flatlining here. So interesting how it was up a good dollar earlier on the day into that inventory number. And then after the inventory number, things have come back down. Actually, a good reference for you if you are a student of the market. Remember, I used to trade crude for prop firms years ago. And a general rule that we have with crude, and you might want to write this down if you have your journals handy, is crude loves to oscillate between 20s and 80s. So I guess you can kind of see that. I mean, we got above here. Yeah, actually, this makes sense. So here is the 74.20 area. That was clearly a pivot here this morning. 80 didn't really represent. 80 almost represented almost like the middle of a seesaw. And then lo and behold here, in fact, actually you can see the market bottomed here at it around 80, not quite 80. But it looks like we're playing the 80-20 game right now here, and now it looks like it's trying to bottom. Anyway, a little tidbit for you from my old crude trading days. I guess the way that I look at crude right now is you can see where I've marked off horizontal support and resistance. I do like this 4-hour high, and of course if we clear through there, next stop's all the way up at ATR and this 4-hour high. But in the short term, had we gotten up into this 4-hour level and the 200 SMA on my 4-hour chart, all my spidey senses would have gone off. So I wasn't able to get anything in there, so didn't really do anything this morning. And you can see gold actually is going through the roll right now. So got to be a little bit careful if you're trading commodities through the roll. And I know a lot of you that watch these videos, you're trading things like Forex markets and CFDs and stuff like that. So you don't understand that a lot of this movement in the market is based on these big futures contracts. I could see a little bit of screwiness in the gold market here as we go through the roll here. So, for whatever it's worth, same sort of logic. You can see where my ATR levels are. I think we have a half decent trade location down here around, 1940 area. And then conversely, against these pivot highs up in the 2000, just above 2000, maybe 2010, 15 kind of idea. But right here, this is dangerous. Very choppy action. And like I said, I would be willing to hunt short longs down in this area, shorts in this area. So there's just nothing I can do. Kind of sitting in no man's land. And then finally, like we said, with the stock market, had a couple 4-hour levels. But what was interesting was, we came into these 4-hour levels, and I was kind of like, candle body highs for trade location. Turns out this is a 50% retracement level. And I was watching for the market to break, as I had shown you there. We were watching for this pattern, and I think to all intents and purposes there was a short here. Just didn't really set up in a good trade location for me. But this move against these lows on the 4-hour chart was right into this 200 SMA. And I was like, in the room, I was kind of like, you know what? I don't think we're going to be able to bust through that low. And sure enough, we bounced right off it. And like I said, Skedfinger, he even identified, I don't see it here, but he was saying that he saw an inverted head shoulder. Maybe he just took the trade off of there and took quite a bit of heat. But anyway, obviously I can't talk for him. It wasn't my trade. But anyway, he got long off of this level. So way to go, Ed. You're kicking butt like a badass that you are. So yeah, I didn't really have anything to do futures trading wise. You can see the percentage moves are relatively small. And I guess the backdrop is there really any news that's moving the market? And as I said, other than crude oil, it's kind of a light business day here. So, you had some data coming out of Europe, nothing really earth-shattering. If we put on like our impact stars, we'll go like only the important news. You can see we don't see anything until Thursday, so that's tomorrow. Do have a couple important numbers, and of course on Friday we've got personal income and spending and core PCE. I think tomorrow, if I'm not mistaken, interesting how they don't give it a 3-star, but I think tomorrow we've got GDP in the States. What do we got? I thought I saw GDP. I wonder where the hell that was. Nope. Maybe GDP's later on. Oh, somebody was talking GDP earlier there. Anyway, it being Wednesday, we are coming into the end of the month. We've talked a little bit recently, I think, with you guys about things like sector rotation modeling. In a weird sort of way, I think that the hedge funds and the sort of bigger players, I think they're happy with where the market is right now. So just see if I can do this relatively quickly here. Let's go maybe one over. There we go. So, there's our backdrop. This image really hasn't changed a heck of a lot over the past couple of days. As I said, we saw the NASDAQ backing off there a little bit because it did get like a little bit ahead of itself. But, where are we in the economy? And this is a big conversation that we had last night in our Stock Pickers Club meeting. I think we're over here, but the thing that we're missing out of all of this is the yield curve is not normal at all whatsoever. And the Fed has not given us clear indications that they're ready to start cutting interest rates. So we're kind of humming and hawing somewhere around this area, but it's almost like maybe with the banking crisis, they feel like maybe the tightening of lending standards by all the different banking institutions might act as sort of the final sort of rate increase, and it isn't a rate increase. It's just we don't want to lend money to you kind of idea. Maybe that's sort of the final nail in the coffin, and maybe they can actually start intonating that indeed they're done raising rates. The interesting, we've talked about this recently, like the Canadians have said that they're basically done raising interest rates. I think the Canadians are actually a really good proxy on Rothschilds and sort of that 1% and the international banking elite and the Great Reset and what is their agenda. So I guess it may be if we listen to them that would sort of fall in line with this. I haven't looked at a Canadian yield curve in a while though. It'd be interesting to see what that looks like. So point of the matter here is clearly we're getting a message from the market where it thinks we are in the economic cycle. And I think it's thinking technology, communication services, discretionary, full recession, market bottom in this area here. The issue here, of course, is that the U.S. economy is so strong and it's set up demographically in the perfect location. You might just not see recessions out of the United States. But, other countries, obviously you see what's happening in Europe. It's kind of just a mess. In fact, it was interesting when we were looking at the economic data coming out of things like Germany. They're still kind of like, not really overly happy. We just do sort of the basic news. Where are we here? Thursday, so Wednesday. So I guess this is today. I thought I saw maybe, let's go previous week. Yeah, I suppose you can look at things like Britain as a function of Europe, but I seem to remember yesterday that we were looking at German data, and it's getting better. Interesting, yeah. So like in Britain, minus 36, consumers are not happy there at all. And things like retail sales and stuff. So you can see Europe's still floundering big time. In fact, actually, we even had some soft data coming out of the States recently. German business confidence is firming, so that's good to see, but still kind of wishy-washy. Consumer confidence over there, just an absolute train wreck. And obviously, with the insane inflation that Europe's having to deal with right now, I guess that makes sense. So, anyway, so the point that I'm trying to make out of all this is, you may see that, sector rotation says things like market bottom, full recession, but you just don't get that recession data print out of the States because their economy is really, really well positioned right now. And if anything, I was also talking last night. I'm not going to share it here. It is behind a paywall. But if you are a member of StockCharts.com, Larry Williams, one of the guys that I'm a big fan of in the marketplace, he was saying he expects a substantial move higher in the market heading into the latter part of the year and looking for a bit of a pivot in July, which makes a lot of sense to me, and especially in the light of if we just pull up simple things like the S&P 500 and our January barometer. You can see I was having this conversation with the gang last night. I mean, January was basically just straight up. So I believe that they, 1%, people in the know, the smart money, the fund managers, whatever the hell you want to call them, they're expecting this year to do fairly well on the whole. On the whole, right? Everybody knows that joke. So, it's kind of, my comment last night was, I don't really think that the S&P is overly expensive. That would be top end of the range. I also don't think that the S&P is relatively cheap. That would be down here, bottom end of range. We're kind of in no man's land right now. So there isn't a hell of a lot that's really getting me excited in the market. Other than the fact that I did like that that JetBlue as an interesting spread trade. Now, it'd be interesting to see, what is it? It's JBLU, right? I think that's what it is. Nope. No, what the hell's that? Can't even type. Let's try that again. JBLU. Hey, there it is. It is interesting. Like, this hasn't taken yet, but, actually, if we have this crude oil really coming off in earnest, maybe that's one thing that's going to help the airlines. We did recently have on the screeners, FedEx came up as a outside upside key reversal. There it is. And this is interesting. Keep in mind, it's a weekly price chart. So this signal has not fired yet, but you can see how close it is to firing. And that's going to help the JetBlue story quite a bit. Basically they run a lot of aircrafts. And are they anticipating that oil prices maybe top out? I don't know. But this would be a bullish bet on the economy. They always say the transports are sort of the ultimate leading. Well, no. We want to see, if we see a breakout in something like the Dow, what you really want to see is you want to see the transports confirm. So the Dow really, it doesn't look to me like the Dow is quote unquote breaking out anytime soon. We're probably going to have to go through a period of finding some sort of bottom here. But you can kind of see this, I mean, it's uglier than sin, don't get me wrong. But you can kind of see heads and shoulders is trying to form here. It's huge formation, eh? Last night we were looking at the transports. First, I have to figure out what the hell the damn symbols are. Dow transports. Let's see, what do we get when we do that? Hey, there we go. GJT, I was close. You can kind of see that inverted head and shoulders pattern also here as well. And actually, we had one transport name last night. It was a shipping stock that we were kind of talking about. It was one of our members' ideas. And it just looks uber bullish. I think, was it this one? Yeah, Navigator Holdings. And, like, this is how long-term Brian looks at the market. So look at that incredible inverted head and shoulders that's trying to come in there. So this is looking at a longer term chart, but it sure looks like this thing wants to try and press to the upside here. And do we break out of this head and shoulders? I don't know. But this would be very, very bullish of the economy, right? If the transports are leading, that's a very bullish sign. So keep that in the back of your mind.
Hey, Brian,
Yep.
coming up on 30 minutes FYI.
All right. Well, I mean, that was considering that we don't really have any news today and no real econs driving price. That wasn't a bad way to fill the half hour, eh? Interestingly enough, I suppose we'll leave off with just a quick comment about the corn. Um, I had put out tweets to the effect, and I know a lot of people get sucked into this, that I had specifically said that this consolidation pattern will not finish until we either close above this 29,000, we'll call it up top here, and this 26,000, let's call it 700, whatever that says there. Got to get a solid close on either side. And so you can see through the weekend, we got that really weird stamp print. It's not really on any of the other crypto exchanges. Made an incredible wick. So you could argue wicks and tails have to be eaten. So there was some unfinished business up here. And of course, candle body highs for trade location. If we did get a rally up into these levels and then a nice rolling top on a divergence, that would be one hell of a trade level there. And same thing to the downside, right? They went and ran the market. This was Wall Street coming back from the weekend. Very well defined 2-to-1 risk reward. I think this was an entirely manufactured trade. Just going to sell that triple top. And triple tops, I find, are just absolutely solid. And what a surprise. Look where the market finished. I mean, literally, the low print there was 2.19 risk reward. I mean, really, I think the trade was basically 2-to-1 risk reward. And this is a very automated trade setup, right? I would even imagine probably a lot of fund managers. It was just enter on the break of this level. Your profit taking levels at exactly 2-to-1. Your risk is against this high. Bang, bang, bang. Done. Thank you. Merry Christmas. Next bus in 10 minutes. Now that that's done, and of course, did they close the market down below here? Nope. You can see. In fact, look how they even brought the market right down against this level again, and they just couldn't bust through that low. So it's the same thing I said before. Drive you crazy. And I'm sure this is why it's so dangerous to get into the business of predicting, especially in this kind of market state. The market can do any old damn thing it wants here. And as you can see, they're trying to flush people on both sides. But you really can't make any grand conclusions about this until we either close above this high here or close below this low here. So really interesting if you map out the reload zones of this last range and look at the counter trend rally, look where we rallied into. I mean, it's almost borderline cliche the way they're doing this, but in essence, that is a reload short zone. And it sure looks to me that's exactly what they're doing, is they are reloading on shorts. And really, you'll know that that is fully in place if we get this nice double top breakdown here. Then we're probably going to come screaming back to the downside. So I did find that fascinating that the counter trend rally did nothing more than take us right into this window. And to add insult to injury, remember my reference about candle body highs for trade location. Look at this on the daily chart. I couldn't believe this. So, that is the definition of candle body highs for a trade location if there ever was one. And look at where we're sitting, literally right now. And we also sort of said the other day, I didn't really like the look of this. The fact that they pushed this to new highs, maybe that's creating our divergences now that we need to see. Still don't really like the look of this divergence. If anything, I'd almost like to see them pop the top here, make a div, and then put in an M and break down. I mean, you can't predict what the hell's going to happen. It's interesting to see how the buying interest has just completely disappeared. And I think really, same thing as we said before, top of the range, bottom end of the range. I don't think you can make any conclusions about this market until we actually break this diamond patterns range. Will he still not technically overbought on the dailies? Oh, wait a minute. There's a 19. All right, so we are technically stupid. So, just for the record, we are stupid. I don't know whether we last. If this thing melts back down, then probably stupid goes away. But yeah, and you just have to wait for it. I don't know how the hell this thing's going to break. I honestly don't know. But we could very easily see another push to the upside. Probably is not going to be a trade I'd be interested in. I suppose you could argue any aggressive traders. This is technically an inside bar there, and you say, look, I'm just going to buy that break, and I'm going to risk to a bottom break of those lows. And that inside bar is quite literally this little 4-hour double bottom down here. Right? So you're long off of that breakout. Your stops below all these lows. You got 3 higher lows. So that's not too bad. And of course, hopefully, had you done that trade, well, you're taking a bit of profits. But this is a range trade. And I still think that we're stuck in a trading range. And I have no idea how the hell this is going to resolve. And I do remember, we have one site member who, and I frankly speaking, I really like the thinking. And he just simply said, Brian, I'm not really going to take trades here if I see sort of a conflicting message. So right now, clearly crypto is kind of roiling. It's fascinating because when you look at a lot of the altcoins, and maybe we'll do that in the Afterparty show, you look at the altcoins and gee whiz, a lot of them look uber bullish. I was even tweeting out last night. I mean, damn, look at this chart. If I was going to teach a course on making money from trading, I mean, this would basically be required reading. I don't know what the term would be. But it's just the most beautiful technical breakout there, and it's just doing its thing. And there's a lot of crypto that looks like this. And so this circles around back to, and I've talked to you guys at length about this recently. How many sixes do you see on the screen here? Do we want to be aggressively shorting sixes? No. So I think that there's conflicting messages here. This might even be something like Bitcoin's just gone too far too fast. I don't know. Stock market's still pointing up, and really, I'd like to actually get a message that the stock market has rolled over before I start declaring tops. And, final thought here, like I said there just a moment ago, we're still stuck in a trading range. And I just don't think that you really want to make a grand conclusion one way or the other until we either close above 28,900 on the upside or 26,700 on the downside. All right, I think we'll leave the daily brief wrap at that. I think we have some major econs coming down the pike tomorrow. So we'll probably see a little bit more movement in the market. As I had said there earlier, what I'm seeing is just a lot of humming and hawing. We got the stock market up 1%. Big deal. Got the commodities actually down on the day. Crude's even slipping more. It almost looks like that was a buy the rumor, sell the news into that crude fundamental event. And yeah, tech stocks are outperforming. Blue chips, old school legacy, kind of underperforming. And good old Sked Finger there. Way to go, dude. He said he strapped on along here, sold one contract at a small profit, stop at break even. Hopefully he's still in his trade. This thing just keeps working its way higher. And he's stinking rich. Interesting how if we can clear through these highs here, you can see this is all open air. There might be a little bit of a fight against this high here. But that's a wick, and our old adage, wicks and tails like to be eaten. So you don't be surprised if you actually see the stock market perk up here a bit here through the end of the day into those big econs tomorrow. Okay, I think we'll leave it at that. Have yourselves a fantastic rest of your day. That was about 38 minutes or so. So hopefully you got a pretty good idea of what the heck I'm seeing in the market here. All right, all the best. Have yourselves a great day. Only thing left for me to say is bye for now.